Only 5 trades. Reduced the target price, we've reduced the stop size, we've reduced it to a single contract just so that we can show what is expected from these trades. We've taken the hard stop to 3 points, and we've taken a hard profit target to 4 points. So here's the buy trade here where the line is, of course, and you can see that the stop was never taken, the price achieved target price. Another buy trade here, stop was never taken, achieved target price, a sell, target price, a sell, target price, and a buy target price. So 5 out of 5 winners. Each trade, of course, would be worth $200 on a E-mini contract, $200. So that would be a $1,000 morning for you from those trades. $1,000 morning for those trades. The ones that you see with the ST attached to it, that's not stops, it's a start. It's actually the starting point. So every max trade would have a starting price. So for example, if this was a buy trigger, the starting price may well have been this candle here. So that would have an ST attached to it to start with, or a green line, or whatever. And you know, what happens is that Max is trying to get a better price. Max is demanding a better price for a buy trade. And what happens, of course, is Max then gets a better price, gets the buy trade, and makes the money. The starting on this would have been at this price here, probably. So there would be a start here. It doesn't have to be. But then needs a better price, gets a better price, gets the trade on, and makes the money. You can see at the top edge, we get a starting price, but we don't get any higher prices. So what's probably happened in those areas, is that Max has got a sell order resting perhaps somewhere up here, never gets triggered, and the price leaves the station without ever triggering the max sell trade. So this is what we call offer watch. The ST is the offer watch. So this ST at the bottom edge here, this would have been bid watch. The price rallied without max triggering. Then we would have had an ST coming in here, and then we get an offer. We get a trade on a trigger, and we get the profit. We get an ST here, but we don't get the trigger, which is disappointing because we did get a higher price. So slightly disappointed that we never got the max sell trigger at that stage, and we got a reasonable response. The sell trade at the top edge here was glorious, brilliant trade. The buy trade here was glorious. But from then on, we've actually just had offers and bid watches. We've not actually had any triggers. We had an offer watch here, we had a bid watch here, we had a bid watch here, we had an offer watch here, we had a bid watch here, we had an offer watch here. These are all at the close of these candles. That's when we get the trigger, at the close of the candle, not after the candle's left, at the close of the candle. That's when we get the trigger. This is the trade that we shouted in the room. The guys will know this because this is the trade I shouted live in the room, is that sell trade there. And then I shouted this buy trade here. The guys know that because we were in the room live at the time and I was talking about it. So I said, that's Max going into offer watch, and then this is what happened. And then I shouted, Max is going on bid watch, and then this is what happened. From those prices, we've had an offer watch, an offer watch, an offer watch, and an offer watch. And all of those offer watches, you can see the price dropped, the price dropped, the price dropped, and the price dropped. If the price had went up, we would have nearly always have got a sell trade on. But the price didn't go up. So we don't get that perfect sell. Now you can see that every single one of these bid watches or offer watches always makes enough money to get at least a stop to break even. So that's something that we have to think about going forward. So you can see that this last one here was at 99, offer watch at 99. It traded 60. Max never sold it because we never got a higher price. But Max was on the offer. Max was looking for the offer. So you can almost guarantee that Max had a sell order here. And obviously when that offer watch comes in, boom, straight down. Straight down. But these are momentum type trades. You would have to think about how to get into those trades as it rolls. Now, obviously, if they're momentum trades and you sell too low, that trade would have ended up scratching. That trade would have ended up scratching. That trade would have ended up scratching. This trade would have made a lot of money. All the other offer watch trades or bid watches, that would have made money. That would have made money. This would have made some money. This one would have made some money. this buy trade would have made some money, this sell trade would have made some money, this sell trade would have made some money. So all the offer watches, bar the last sequence at the top edge going into the cash, the US kind of pre-market, every one of them would have made money or scratched. So that's something that we maybe have to think about as a consideration going forward, is that these are possible trades in their own right, but perhaps with a different buy and sell mechanism into this. So we're watching to see if we get any more opportunities. But that's how Max is looking at the present moment. These would be the 5 trades we would have had officially. And you can see that from those 5 trades, they've all done relatively pretty good business, all reaching our first target price of $200, just to make sure we can bag and tag some of that money. This is on a 2-minute chart. The idea is to try and balance the size of the stops with the targets and with everything else without getting too busy, without getting too much, and still making it available for the micro contract users, but bringing the size of the contract down a little bit in the micro, the E-mini world, to see if it's still possible for people to use that. But you can see that so far today, 100% winners on the offer watches, bid watches, and the buy and sell signals. So I'm very, very happy with the outcomes. We now have it as a single price line now. We have it as a single price line. And from that price line, we're now able to make a trade decision based around that. We are on an offer watch, by the way, just now. So I'm going to be watching for an offer watch on the Max at the moment. So there's a possibility. We're going to be seeing if we can get a trigger for the first time in a long time already. So that's something I'm now going to be watching to see if we can get a little sell opportunity into that top line. Let's see how it goes. Anyway, welcome in, guys. I hope you're all good. Sound bites from Ukraine dominating action. We've been trading bonds this morning, and we've done very well on bonds, but obviously we're always aware of any sound bites that might come back and bite us on the bum. But we've had some brilliant trades on bonds today. We talked about all of the morning trades. The structure was sensational. Well, if that structure's sensational, guys, look at what happens at this mid price that we gave you out this morning. Look at what happens at that mid price. That was the very price that the buying took over for the big rip to the upside. Wasn't that not beautiful? Damn right, that was beautiful, right? I can agree with you on that one. And you can see that we've already busted wide open the target price at the top line there. So a brilliant trade for anybody that flipped. Now, why would you have flipped into this? What would have been the reason for flipping back into a long bond? What would have been the reason for flipping back into that long bond trade? Well, of course, risk. The one line that we've been using in those areas has been always the S&P or the Japanese yen. So when we look to the Japanese yen, is there anybody that doesn't think we should be buying this pink line, yes or no? Did we mention this morning, that the Japanese yen is your main driver line this morning? Did we say that to everybody? We were asked the question, in fact, about inflation this morning, and I said, no, it's all about the risk. It's all about the 6J contract. Make sure your 6J contract is on your screens. That is your driver. Every trade we've taken today has been in line with value divergences on the 6J contract. This price that we already knew about from this morning's class, yes, we already knew about the price of 11s and 12s from this morning's class. So when that price starts going up like this, you're left in no doubt you should be buying the 12s. Congratulations, you've just made over $1,000 on your buy trade since the classroom we did this morning. 6J magnificence on this occasion. What else? Well, of course, we talked about the idea that hedgers are going to be flocking into the thickest parts of the liquidity, which is the 5s and the 10s. So we really want to get into that front end of the curve to see exactly what's going on in terms of values. And we chatted about the idea that if the bond is doing what the bond is doing, we want to be in it. Now, there's where the challenge came in here. But the blue line was making higher highs as well. So it wasn't as if there was a change here that we couldn't deal with. The blue line is making higher highs. The black line is only just making higher highs at the same time. So we can already recognize that there is definitely a chance to buy into that bond at the bottom. It's not great. I'm not saying it's great. The Japanese yen was the main driver for the longs. but you can see obviously there was a marginal advantage. Now into the high price here, we had a slight opportunity to start selling into that wholesale price 16 and the measured move at 13s. So there was an opportunity to start working on the offer side here. There was an opportunity. But if we could take a step back for a second from that opportunity, and we ask the question, well, I know there's an opportunity, but what was the Japanese yen doing at that stage? That's a tough call. Because whilst it hasn't gone higher, it certainly hasn't gone lower. It certainly has not gone any lower at all at that stage. And that makes that a really, really tough sell. So for me, I wasn't that keen on it. What I did do instead of that sell was I used it to simply take some monies and say thank you for that trade right there. From that point onwards, we obviously had a halfback trade from the breakdown level here. We had the perfect halfback trade level forming. And if you fancied doing a bit more buying, there was your opportunity to buy it again, knowing that the target price is back above the 16 price. The halfback is a good trade to still trade here. So there was your opportunity to buy it. Would you buy it against the curve? Well, let's take another look back at the curve and let's answer the question. If we're going to buy it against the curve, what we need to do is we need to see the blue line making higher highs against the relevant value in the black line. So if I zoom into that phase, does the blue line make higher highs during that period? Well, only really on one candle here. So on that one candle there, we can see the blue line is touching back into the prior highs. The black line is down into that area. So in other words, the black line's been falling from this point to this point. That is bullish. So yes, there is a reason to buy that price, and I obviously was able to take advantage of the halfback narrative, buy up some 4s and 5s and 6s, take the market north back into the highs again. It's not that difficult to see. It just requires you to take a look at it on the short term to really zoom into that narrative. Back into the highs, what is the Japanese yen now doing? We're starting to see lower highs and lower lows on the yen. So in other words, we're starting to see an unwind in terms of risk. The dollar is starting to catch some offers. We're starting to see that narrative unfolding. The Japanese yen is catching a few little offers. The S&P is catching a few bids. Things are starting to just become a little bit safer. A little bit safer. It doesn't mean we just simply rush into the top edges and start selling tons of bonds, because it's not as if we're in a risk-on environment. The S&P is bigly down, so we're not in a risk-on environment, but we're just not as much in a risk-off environment. That's true. So we start watching our curve to try and answer the question. What is the question? Have I got any value? What am I looking for value? Well, the black line needs to start moving higher. It is starting to move higher. The black line is starting to give us, well, it was for a few seconds there. The black line was starting to give us a look as if it wants to go a little bit higher from a point-to-point basis. The blue line over the same period seems to be struggling a little bit more than the black line. It's early. It hasn't formed. It hasn't given us a concrete example of a brilliant tradable opportunity, but it's getting there very slowly. It's getting there. There may well be a top edge starting to form. There may be an opportunity to start finding some leans. There may be an opportunity to get short, but it's early to the party, guys, early to the party. So be careful. There may be a big dose of selling coming into the US Open for the weekend, so bear that in mind when you're trying to think about selling bonds. I'm very reluctant to be short treasuries going into all weekend, but it has a lot of potential risks attached to it. So I'm very reluctant to get back into this short trade. So it's going to take a lot to convince me. That should make an awful lot of sense, yeah?